Everybody, this is Hub and Giacomo, and today we're covering Amazon. This is one of the stocks that you asked me to analyze, and today we're taking a look at it. Before we get into the video, make sure to like, subscribe, and comment which stocks you want me to analyze next. If you're interested in doing the analysis on your own, I'll put the links of the databases that I use in the description, so make sure to check that out. Let's get into it. So Amazon, household name, we all know it. It is a giant in e-commerce, and now it's getting larger and larger by expanding in new countries, and then with the Amazon Web Services, the cloud services, and so on. Let's take a look at what Wall Street thinks of Amazon right now. So we can see that 98%, incredible number, 98% of analysts on Wall Street recommend a buy right now, and 1.8 a hold. So that's a very important signal that we have from Wall Street, that they have faith in the ability for Amazon to keep growing even at the size that it already has. So we can see the development of the price targets for the last year. We can see that they have slightly gone down, but we can see that they haven't gone down as the rest of the market. The market as a whole sees Amazon as a safe bet, a household name, very strong moat, very strong capabilities, and incredible possibility to reinvest the earnings that it generates to grow even bigger. So we can see that all the analysts right now have a price target that is above the trading price. So that's a very positive indicator. Even though they can go down, it's very positive to see all the price targets above trading price. So let's take a look at the latest reports from 2 months ago. They still have a target price. Here we see 175, 200, 165, 200, and so on. Let's see who performed best on Amazon. Let's take a look. So we can see these guys from Benchmark, from Oppenheimer, from Wedbush, Bernstein, and so on. Let's take a look what they have, how they have developed in the last year. So Wedbush, Oppenheimer, Wedbush, here it is, Bernstein, and Oppenheimer, there it is. So the one from Benchmark is pretty old one, 11 months ago, but we can see the ones from Oppenheimer and Wedbush that are strongly above the trading price. So that's a positive thing, given the fact that on average it took about half a year to meet the price target that they had. So that's a positive one. Let's see some other analysts to get a better perspective. Let's see from Guggenheim, Bank of Montreal, Guggenheim. So we see that even for them, it works the same. The pattern is pretty much the same, and we see that overall Wall Street has trust in the ability of Amazon to continue growing. So let's take a more general look of how Amazon is doing. So we see the market cap, pretty staggering one, income, very important, sales and so on. And we see price earning ratio extremely high but justified given the fact that the market expects Amazon to keep growing at a very strong pace. Debt to equity we see very manageable. So we hear the news, nothing very special for Amazon except for one piece that I read that I'll tell you about from the Wall Street Journal, which talks about the FTC, the Federal Trade Commission, one of the most important agencies of the United States, and it reported that agents inside the Federal Trade Commission, so one of the commissions that is supposed to regulate companies in case there's a risk of monopoly and so on, are buying big into big tech. So Amazon, Facebook, Google, and so on. So that's a very, very positive indicator as well. So very important news, very interesting, and great piece from the Wall Street Journal. Make sure to check that out. I recommend that. So let's take a look at, let's see some highlights of the last few years from Amazon. So we can see the revenue in millions of dollars, how it went in the last 10 years or so. Amazon is getting closer and closer to 10x the revenue in 10 years. Terrific numbers, incredible. So EBITDA going up and up as well. We can see the debt totally manageable for the size, the growth that Amazon is able to achieve. And as I always say, as long as the debt is manageable, that is good, because many times it's cheaper to finance yourself through debt rather than equity and so on. So market cap, very, very important one. We can see that the enterprise value to EBITDA has gone up and up, and now in the current situation it has gone down to more reasonable figures. So that might be a buying opportunity for Amazon shareholders. Then we see shares. We see that it has slightly diluted the shareholder base, but totally justifiable by the growth that Amazon is able to deliver. We see the earnings per share from slightly negative to very positive, so great performance. And Amazon doesn't distribute dividends because it decides to reinvest in itself. So in this case, the dividend, the fact that Amazon doesn't have a dividend doesn't mean that it's a bad thing. So as long as Amazon is able to deliver this sort of growth in revenue, earnings, and so on, totally justifiable not to have dividends. So this is my overview for Amazon. If you haven't done it yet, make sure to like, subscribe to the channel, and comment which stocks you want me to analyze next. And this is it for today. I'm Giacomo, this is Hustle Hub. See you next time.